This is bad. The S&P is showing us a warning that we've not seen in 29 days. Could we be headed for a correction? Citigroup says that the S&P exposure hit these levels and then we dropped by 10% last time. So, are we climbing the wall of worry or is there more at play here? If we look at another stat here, it tells us that stocks are overdue for a correction. On average, we get a correction every 172 days. As of this screenshot, it's been 288 days. So, as we continue to climb the wall of worry, maybe we're going to get a rug pull. That's what it's basically saying here. We can also look to the S&P and see that what I'm really pointing to here is a pattern where we see two red days in a row. So yes, I'm being a little bit facetious. I'm making a joke because we haven't actually seen two back-to-back red days going all the way to August. What is also notable is that we're gapping down to our uptrend here, and we did get a pump up. What I am unsure about is whether we're actually going to hold up here, because if we look to our weekly chart, as of right now, we have a weekly lower low. So let's make this really, really simple. Right now, we got a bullish pattern. We have a bullish pattern until proven otherwise. What would prove us otherwise? Well, if we get another red day. Why? Well, because then we're getting three in a row, and we're likely going to be testing that weekly low. We got some big earnings on the docket. So if we're going to get a 10% slide, here's the warning. If we're going to go down 10%, first of all, we have to lose 578. That would invalidate the bullish pattern. And then we start to look to higher time frames where we get a very simple bear recipe. We just apply this to the weekly chart. All right, let's go. So wall of worry, right? We're overdue for a correction. Make sure you watch until the end. I got a hot tip for you at the very end there. All right, so why else were stocks down? Well, IMF lowers global growth forecast. Well, I can't talk today either. Warns of increasing risks. All right, there you go. All right, cool. So we're not going to grow. Nice. And then ASML chief says U.S. is pushing for more chip restrictions. Okay, the U.S. is going to continue to apply pressure. Remember, ASML had a big dip about a week ago. And this is really important because earnings are the most important thing for investors, even more important than the election. So if we're climbing the wall of worry, when should we be at the top of the wall of worry, meaning over everything? Well, investors say that NVIDIA earnings may bring good news, right? 45% of the time, right? 45% investors, sorry. So have little impact. Hey, that's most people. So on November 20th, when NVIDIA reports, we should be at the top of the wall of worry. But hey, there's more things to worry about between now and then. This is a bearish video sponsored by Mr. Red. So this is the very scary update that I provided about 2 months ago. Actually, the best performing video on this channel. What I said was, this is very scary, worse than recession. And yes, this is not looking good. This is a reversal to get up back above 4.16, a level on the 10-year note we've not seen since 1988. When these lines go up, S&P goes down. So a bearish pattern with a head and shoulders and a golden cross and a key pivot here. Oh my goodness. On the weekly chart, we're back above our 50 moving average, and we do have that head and shoulders we note on the monthly chart here. So one team's going to win. I would also note that our algo said that the weekly chart for the dollar, the 2-year note, and then also the 10-year note, we're all bullish. This was as of August 12th. So we're seeing some continuation here. This is not good, right? It's not good at all, right? This is bad. We're giving you a warning. So a lot of people are, the consensus right now is that big tech's going to deliver, right? We heard about that yesterday. So Tesla kicks it off tomorrow, and then it's the thick of it next week. Alphabet, Microsoft, Meta, Amazon, Apple, and then round it out with NVIDIA on the 20th. That's about 3 weeks later, though. Stars stink, right? Starbucks is front-loading all the bad news. This is very typical when a new CEO comes in, right? Front-load the bad data and pull guidance. Nice. Why? Hey, the bar's so low now, it's going to be very hard not to get over it. So far, earnings today, which was a really important day, a little bit lackluster. So let's look and see what's notably moving. It's really just Microsoft. So just before we talk about Microsoft and the reason why it's moving, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel. Thank you very much ahead of time. So Microsoft is up. Citigroup's also up, but it just looks like a gap down pump up. So Microsoft is the focus for me today. What happened to Microsoft? Well, Mr. Mark Benioff, who reports earnings pretty soon here too, he's calling Microsoft Clippy 2.0. So there's a huge fight right now. I was actually quite entertained when I read through this last night. So Microsoft is actually, I think, getting a little bit of lift from this. And what's the reason why? Where are we here? All right. So these things are called AI agents, right? This is the new AI hype. So we're looking here to Microsoft, Salesforce, and NVIDIA, and they talk about AI agents on their last earnings call. What do you think analysts are going to be asking about this time, or what these CEOs are going to be pumping? That's right, AI agents. So you can clearly see a huge increase, right? Last quarter, you can see 65 times by Salesforce. So he's like, Clippy. If you guys remember Clippy, it was the terrible product that they launched for Word. and for other products that was just actually really bad. Anyways, pushing forward. So now it's all about Tesla after the bell tomorrow at 4:10 p.m., Wednesday, October 23rd. They're expecting a double-digit beat. Again, that's the expectation. I think guidance is going to really matter as well. And frankly, if the stock is not a total dumpster, that would be a surprise. Why? Well, because the last couple of reports, meaning how many here we got? 1, 2, 3, 4. They've all been losers, right? You buy it, and they'll do good. Yeah, the chart sucks. So it's trying to stop going down. We're seeing massive support here on the weekly with an attempt at a curl, but notably on the monthly, if we can maintain this higher low and push above 235, blue line, blue number, that's going to be the 50 moving average, we could be heading for a W, which means what? Potentially moving higher. If the pickup trade is going to get here for the Mag 7, this one's stinky. It's not magnificent. It's magnificent if we do this, though. Here's a joke. Let's have a little bit of fun. We're going to flip Tesla upside down. And then what does it do? Let's go to, should have probably done this ahead of time. I'm trying to wing it. Oh, no, this don't work good. It's supposed to be an M. So let me just go back here because clearly I made a mistake here. So I was trying to make a joke. Let's get out of logarithmic. So I was trying to show you that there's an opposite W for bearish. So a W is just an M upside down. All right, there you go. There's my attempt at humor. All right, now that hot tip. Here it is. It's Constellation Brands. It's STZ on the American side, and we can see that the risk reward is 2.68. We should get a follow through alert tomorrow, and this one looks really good. I quite like it. So it's a trade alert, and if you want to find out more, I encourage you to subscribe to the channel and come hang out with me at 9:15 a.m. tomorrow. Thanks so much.